All right, great. This is day 3. We're going to discuss underwriting today. Before I get into that, everyone, we've had 2 classes so far. Just want to see if there's any takeaways from it, any things that you learned that you really thought was interesting, or anything that you didn't like throughout the process so far.
You have to warn us when you're going to take pictures.
Oh, yes.
At least like make a face or a
Those
hand
are,
wave or something.
those are
Anything.
candid shots, all right?
Oh, thanks. Thank you so much. Always our best look, right? Candid shots. Anyway, now to the serious questions.
I really
Um,
liked how you explained the broker relationship. So you just went into that a little bit more realistically. And I really like the way you emphasize what should be the obvious, and that is you're not going to lie about your experience, but you want to engage with them in a way that shows them that you are there for a reason and you're not just a flash in the pan.
Yeah, absolutely. That's good.
I think I also thought that the one-on-one role play that you gave with Jody was also perfect. And the sense we're sometimes doing role play as students when we're first starting can be a little nerve-wracking or just maybe inefficient because we probably aren't doing it with someone who knows. So like doing role play with you directly, since you've spoken to a broker before, makes it so more realistic in a sense than if we did it student to student.
Absolutely. So one thing I'll suggest to you, and this is something I did early on, if you're feeling like you're not confident in talking to a broker yet, call some brokers outside the markets that you're looking in. So if you're looking in Texas, call somebody out in Idaho and just screw up because it doesn't matter, right?
Just a phone call.
Yep.
That's all it is. We make it so much. Like when I first started, made it so much bigger than it was, and I'm like, this dude trying to do the same thing as me. Why? Who is he? You know what I mean? Like I put these people on a pedestal in this industry, and it's like, yeah, I got my own niche that these guys don't have. So let's talk my game too. You know what I mean? So you got to put yourself in your position, like, yo, I got these values and I got these skills. So let me stick to what I have and not try to make like I'm some, superhero over here.
Absolutely. And there's a very interesting dynamic that happens when you start to know more than some of the brokers and you start to tell them what's going on.
Exactly. That feels good.
Anyone else? No. All right, great. We will get into the underwriting then. I pulled up a random deal yesterday. Did not look at it. I wanted to not have any involvement in it so far. So here's the property. It's in Canyon, Texas. I'm just trying to get rid of this thing up here.
Looks like a Texas property built in the 60s or 70s.
Very good. Very accurate. Anybody know how to get rid of the bar at the top of the screen in a Zoom?
Oh, I think it's like hide
There we go.
something panel.
Okay. So here's the OM. Is everyone familiar with what an offering memorandum is?
Yes.
Okay. So there's actually 2 properties in this offering memorandum. And before we start scrolling through it, I looked at the email, pulled up the OM. What are the first things that we're interested in finding out about this property before we even get too far into the weeds?
Oh, I look at how old it is, like right off the bat.
Okay, so age.
So unit count, size.
Count.
Location.
Location.
If it's what we're looking at.
You mean your criteria?
Our criteria.
Absolutely, 100%.
That's the first thing. Is that our criteria? Nope. All right.
Absolutely. That's the first thing that you're looking for. Everyone said it. Michael just put it, summed it up. So we're looking to see, does it fit our criteria? Is it the age range we're looking for? Is it the location that we're looking for? Is the unit count we're looking for? Is it the style we're looking for? What type of rehab is it? Is it gonna be a value add? Is it a stabilized deal? Is it distressed? Those are the things that you wanna look at first and foremost, and is it in our price range? We're going to assume that this deal is exactly what we're looking for, just for the sake of this process. So we'll start scrolling through here. Here's our address. It's going to be 48 units. Now this is combined between the two buildings. 1965 and 1976. Sorry, my computer's being a little slow here. So we'll see its location, which looks pretty decent compared to what's going on in the market right here. I don't know anything about Canyon, Texas, but
Oh, it looks close to Amarillo, is that right? Oh, it looked like it on the map, close to Amarillo, maybe. I see those other two pictures that popped up. It says Carmel in Amarillo,
oh
and
yeah, I guess so. Yeah.
yeah,
Yep,
I
there we
guess
go,
it's
right
up
there.
there, so it's up there.
Okay.
Gotta have a Chick-fil-A.
Just more pictures. Okay, property details. Now, depending on the brokers, depending on how they're going to lay these out, so they all look a little bit different, but they all have pretty much the same information in there. So, sale price, market, that means they're not going to put a price on it. They're going to let offers come in and determine, what the purchase price will be. Let's see here. Anything else that we can see? Move this out of my way. Okay. Here's a good shot of the unit mix, some pictures. We could see that it's dated. It's going to definitely need some rehab. So what I'm going to be looking for right here in this unit mix is what is the broker suggesting? So there's 28 units. Actually, before I go into all this, let me see how the rent roll is broken up. Four Seasons Apartments. Okay, so they probably combined both of them there here. So we have 28 units that are 1-1, 607 square feet. Effective rent is $620. Market rent is $625. Now, before we go any further, I want to stop right here and just address something. If I see pictures like this, and I see effective rent of $620 and market rent of $625, I'm closing this out. I'm done with this deal. This is probably going to run you $8,000 to $10,000 to fix it up to get a $25 rent bump. It ain't going to do it. I'm telling you right now. But for the sake of the process, we'll continue going. But notice the gap between what the effective rent is and what you can get. That's going to be a big determination of whether you should move forward in a property. So always be aware of that. I like to see a minimum of $200. I've seen some $150 rent bumps get close. Anything over $200 is usually a pretty good sign that you can renovate those deals and get your returns that you're looking for.
As long as you're getting that couple $100 a month on those returns, around that $10,000 a month rehab budget, you'll be okay.
Absolutely, because you got to anticipate a 5-year hold if that's what you're going to do. You're going to, how fast can you get your money back? So I want to get my money back somewhere between 24 to 48 months at the worst. 36 months is ideal. That way you're cash flowing for 2 years.
Got it.
Once it's
Makes
renovated.
total sense. Yes.
So 2 1s, you have 20 units, 960 square feet, $766 a unit, and market rent is $800. So $34. Not a big difference. Now, I want you to notice something right here. Pro forma rent. How can I put this nicely?
It's
Bullshit.
bullshit.
Okay, thank you.
It's bullshit. Pro forma's bullshit.
Everyone's been around the block once or twice. Okay. Here's what most people will tell you. Never use pro forma rent in your underwriting. I think that's terrible information to give you. Here's why. I want to save myself time. I want to save you time. Use the pro forma rent, because if you underwrite with the pro forma rent and it still doesn't work out, that's a pie in the sky number. You know the deal's not going to work. So why invest time trying to get rent comps when you have that and you could just use it? Now, if you use it, the deal looks great. Obviously, we're going to do our rent comps. But for quick underwriting, just use them. That'll give you a real good sense of what's going on.
Okay.
So pro forma 705 for the ones.
Just that little thing that you just said right there,
Yeah.
just that little thing. You just made my life 100 times easier.
That's what I'm here for.
That little thing right there, like, yo, put it in, just use it. Because I always thought Performer was bullshit. And I'm like, why am I gonna use fake numbers? And I don't know these guys. You know what I mean? Because anybody could put anything for Performa. So it's like, okay, put those in. And if that's makes so much sense. Okay.
So I am naturally lazy. I'll admit it. I'm naturally lazy. I want to find the quickest way to do everything. So when I started and I was talking to my mentor, the first question I came up with after I underwrote a couple deals that took me 4 and 5 hours to do, I said, how can I speed up the process? What are the things that I need to look for in order to save myself a bunch of time? So right off the bat, I realized, what is the current rent? What is the market rent? Okay, it's not $200. I mean, these are things I looked at over time. Using that performer rent, because everyone told me the same thing, don't use it. But if I spend a bunch of time doing all my market research, looking at rent comps, I'm just wasting my time. So those are the things that I look for there. Now they've broken out on their OM here. T12, T6, T3, T1. What this means is we're going to be looking at a trailing 12. There's different ways that you could figure out properties. Now, if you're talking to a mom and pop, you're probably going to want to analyze the property on a T12. When you're talking with brokers like this that are selling a little bit larger deals with buyers who really or sellers who really understand what's going on, you're probably going to want to analyze it on a T3. Today, for the sake of simplicity, we're going to start with T12. T1, the market's got to be very hot for that, and it's got to be the right property. That's a conversation that you're going to have with your lender about how they're going to look at it. So that's how you're going to want to look at it. This is all nice, and if this is all they provide you, then I would use this. But they've actually given us an actual T12, so we're going to work off of that today. Here is their pro forma. Again, it's garbage. The only thing I will suggest to use off of this that will be somewhat close, but you still got to check. You're going to look at, okay, they don't have any payroll. So if you're going to manage the property on your own, you're going to have to consider putting in payroll. They have 0 advertising in here. They've added it into their pro forma as well. So that's good. We'll have to look at that in the T12. Real estate taxes. I don't know the area. It doesn't look like they've adjusted them. This is something, just use the taxes. If this is their first year one, again, for simplicity and being quick with the underwriting, use the taxes for right now. It's just as a marker. Same with insurance. It doesn't look like they change them at all. Maybe a 3% increase, but just use those numbers for now. Management fees, I would just use those for now. Holy Jesus. Okay, here you go. Anybody know what's going on with the market right now?
Inflation?
It's not you mean the rents are not going up
Rents are
like
not going
that?
up right now, they're going down.
10%.
And they've added a 10% increase for the rents year one. Now, I don't know if that's their renovation or if they're just assuming they're gonna raise them as they are. So that's a question we're gonna have to put to the side and ask the broker in an email. Year two, that's garbage as well. I would tell the broker he's an idiot for that one. In a nice way.
Yeah.
Year three, maybe we'll have to see how the market shakes out, but you got to look at what's going on and how they're underwriting. Again, take a look at it, but don't use other than those taxes and insurance and maybe a management fee just to get an idea. Here are some rent comps that they're giving you now. The one thing I will say with rent comps is they like to pull out properties that make their property look like it's going to be better. If this is the subject property, these may be good rent comps, but one thing I like to do is if we pull up apartments.com, and just for time, I'm not going to do it. I would like to pull up apartments.com, put in Canyon, Texas. I want to zoom in and I want to look at all the apartments in this area. And then what I want to do is I want to compare the units, the age, the location, all to my subject property. And I want to come up with my own comps for it. Now, the other way to go around that is if you already have property management in place, you could just call them up, ask for a CoStar report.
Yeah. Right off though, two of those don't look like very good comps. They're like built in 1984
Exactly.
and they're bigger.
Well, 1984, 1976, that's not bad. Unit size is a little bit higher. You have to do a little bit more research, but yes, I would always be cautious of what their comps are. Always look at your own, always do your due diligence. And
Well,
if you get into
one of them was 65, wasn't it? One of the buildings?
Yeah, it is.
well, that's, yeah.
Right.
But again, there may not be 1965 product around it. So this is all the reason why you need to do the research on it. And then if you're going to get into the point where you're actually going to submit an offer, you're going to call all these apartments and confirm their rents. So if you use Canyon Creek here as a comp at $900, you're going to call them up, and you can do this one of two ways. You can act like you're a renter, call them up, tell them you're looking to rent a 2-bedroom unit at their place, see how much it is. I'd ask about any amenities that they have, any concessions they may have. Is there any deals right now? Find out exactly what's going on. Or you could just call them up and say, hey, listen, I'm an investor. I'm looking to buy this property down the street. Can you help me out with something? Either way works. I haven't had a problem either way. Most people are like, hey, I don't mind giving you a couple answers for a couple minutes. So let's get now into the actual underwriting process. Really, the only thing we needed out of there was a couple things that I went over, and you can do that in a minute or two. I can get rid of this thing here. There we go. So like I say, today we're just going to work off the T12. We'll get into T3 later. So we want to look at total income, 67,988, 167,988. Um, 23,000 in utility. And other income is 2,300. Admin fees are 92. Now, right off the bat, I did notice something just because I'm used to doing this so much, but anyone notice anything that's not included in other income right now?
pet fees.
Okay, good. That was actually in the OM that there was, I think it was $25 in pet fees. Now, that may be, no, it wouldn't be anything because it's not. I don't see a 25 or 50. What's the biggest one?
For laundry.
No, I mean, what's the biggest one missing?
Oh,
Parking?
Mm-mm.
Mm.
Late fees.
Oh, wait. Oh, okay.
They haven't charged any late fees. So they either have fantastic tenants or they're not charging it. Opportunity right there, right? Also with the pet fees, great catch for you.
What if they put it under the rent? Like, what if they just lump it all together if there's a late fee? No? Would that
They
not?
shouldn't. They shouldn't.
Right.
That's
Okay.
other income. That's not a see, this is rent income and this is month to month fee for the income. See how they just broke that out? So the rent from somebody's included in here and their additional month to month fee is down here.
Yeah, they should
Things
have the late fee under there too.
things from brokers should not be like that. If you get a mom and pop who doesn't know what they're doing, yes, that could be, and that's a great question to ask them. If a broker doesn't separate it out, well, they shouldn't be a broker. All right, so we have our repairs and maintenance. Contract services. All right, janitor, the contract services, but okay. Total utilities, 36. Actually, that's water, isn't it? Or do they just,
Gas, water,
Yes, okay.
and electric.
somebody just electric, gas, water.
Does it seem like the maintenance is pretty low for an old building, or is that just me?
No, it does seem a little like they're not doing much.
Yeah,
The
I have a
maintenance,
question on the con.
um,
I have like a lot of those are months have zero. Like contract services, it looks like they only have 4 months of contract services and the rest are zero. So I was wondering if you would just want to take like that monthly rate that they're using and multiply that by 12 rather than accounting for 8 months of zero.
well, you don't want to do that yet. And here's why.
Okay.
Right now, we're just putting the numbers in as they are. The next step after we start the process will be to go through this line by line. Like I would write an email out and say, hey, Mr. Broker, I've penciled out the deal. I like the way it looks so far. Here are my questions that I have on the property. And I would say maintenance. Why is there only a charge for $160 in April of 2023, but nothing else? Why are there only a few? Like I'm going to ask them line by line why there's plumbing repairs here, but not a single plumbing repair here. Why is there only one electrical repair? Why is there only one lock set of keys? You only had, you know what I mean? Like these are all things that we're going to ask the broker. You want to know every single line item and every single month what's going on.
Okay.
Other expenses, $16. Court costs and eviction, so I'm just gonna lump those together. Legal. 324. Property taxes. Okay, so taxes here are 11,000. If you remember in the pro forma, they're at 40. So obviously the broker did adjust for them. Insurance 89. 2332. Now that we have all that taken care of. Here is the Michael Blanc underwriting template. This is by far the simplest one that you can use. If you're going to just do straight agency long-term debt, this is great to use. If you want to get into some more advanced underwriting, I'll show you one at another point, but there wasn't an asking price. So I'm just going to assume that it's $100,000 per door just as a starting point. So it's 48 doors, 4.8 million. 48 units. I doubt we can get 25% right now, probably closer to 30 as a down payment. Interest only. You're going to ask your lender whether you can get interest only right now or not. If you can get it, I wouldn't put it in here right now, but you could put it in your offer column over here. Operating reserves, you should have anywhere between 2 to 3%, depending on the property for the price point. So 3% comes out to 144,000. I'm just going to say 150 right now.
I think nice. This underwriting template.
Yeah, I like this.
Yeah, I like the side by sides.
And then let's see here. So our gross potential rent was 167,988. For the moment right now, did I write it out that way? I did write it out. Okay, so this doesn't include any vacancy, loss to lease, concessions, bad debt, anything. So we'll have to make sure that we get answers from the broker on that. So for now, we just leave these at zeros. They did have some other income and utility reimbursement rubs. So 23,003.2 plus 23 and 24. Additional 25,656. Now, this is generally how I start. There's two ways that you can do it from here. You can either just take the whole lump sum right now and stick it in here just to see where it comes out to. I do that because I'm used to doing it that way, just to be very fast right now. But for training today, we're going to put them all in. But just consider that you can always just throw a bulk number in there just to get an idea of where the deal sits. So admin is 9203. Repairs and maintenance 8929. Contract services 3. Electric and gas. If anyone has any questions along the way, feel free to just ask. Cool. Taxes. Insurance.
All these numbers you're putting in right here, these are all for the year, correct? Nothing in here is monthly.
Correct. Yeah. So we're analyzing off the T12. So it's T12 income and T12 expenses. If we're going to analyze it off of anything less, say a T3, It's T3 income annualized, but it's 12 months expenses. You don't ever annualize that. You always use the trailing 12 months expenses. Okay, so trash removal, management fee, payroll, turnover, so just changing one of them to make it easier on myself here. Now, the Michael Blanc, whatever you want, however you want to say it, it adds in your replacement reserves. You do not need them in your offer price or in your marketing package. You'll always change that to 0. That way you get a more accurate reading. So, anyone have an idea where the interest rate sits right now?
About 8, 7.5.
Yeah, about 8. Let's just use 8 to be conservative. 30-year AM. How's your cash flow looking at that price?
Oh my god. A little bit bad.
So here's what I would say. At this point, we already know that there's no management fees in this, which we're going to have. There's no payroll fees in it, which we're going to have. So this property is already, it's running right around where a 1970 property is going to run, between 45 and 50%. So we can't really get much better on it other than lowering the price, right?
Then you probably need to be at like 60 a door.
Yeah.
Which would be
I mean, it seems to me like you would just take the net operating income and divide it by the market rate in the area to come up with a ballpark starting point.
You can do that as well. See, normally I have a very good sense of where these things are only because I call the broker first. They'll usually
Right.
give you a whisper price or what else do they call it? I have another name for it.
Guidance.
Yeah, price. Well, here's the thing I want to tell you. Does anyone know the difference between a whisper price and pricing guidance?
No.
A whisper price is based on what the broker believes it will sell for. Pricing guidance is what the seller is asking for. So if you hear pricing guidance, again, like they're throwing something against the wall to see what sticks. If they say guidance, I'd always ask the broker, what do you believe it's going to trade at? They'll tell you. They'll have a pretty good sense of where it's going to be. Sometimes they're a little off, but they'll have a pretty good sense. But yes, I think it was Stacy that said that. You can absolutely start that way, just because of the template and how easy it is for you to use once you get into it. If you don't have something,
Okay.
throw something in there and just see how it pans out, because you can always just change it quickly.
Yeah.
So we're still at negative $74,000. We're still at a DCR of 0.58.
How would it look if you put in $3 million for the price?
We're at
I'm
2.8
just-
right now.
Oh, never mind. I didn't know.
If you
Oh, yeah. Yeah. No.
So if we were able to get some interest only at that price.
Well, if you do a
So-
7 cap, it's only
What's that?
1.43 million.
Right.
Mhm.
Which this is still negative leverage because our interest rate is higher than our cap rate, which
Right.
is okay, but you don't want to get too far off. But yeah, I mean, this gives you a very good idea down here if you want to start changing it and say the market's a 6.5. There you go. And Stacy, that actually answers your question better. Once you get down to there, you could just quickly do that instead of actually, doing the manual side of it.
We're not even talking about all the problems these Texas 60s and 70s properties have too. They have a shit ton of issues.
So beyond this point, I generally don't mess with the my version or projected. I usually just move over to my offer price and start putting in my numbers. So based on that, I would move over here and I would find out, well, what is the vacancy rate for the area? The broker's always going to usually put in 5%. Let me see if they have. They put in 8%. So maybe that's what it is. I haven't usually seen one that high, but we'll move over here. We're going to put in 8%. Now, again, you got to remember this number didn't have anything into it. So we have to figure out what that actually is. And the other way that we can do that is take a look at the rent roll. Now, this is only for 28 of the units. So 1, 2, 3, 4, 5, 6. So 13,630 divided by 22. So there's 6 vacant, so we don't use those. So 6 minus 28 is 22 units. It's got an average of 619, which the broker said an effective rent of 620. So the other option, let me see here. What was that? 4 Seasons.
Why would some have all bills paid for themselves?
So there's 2 things. They could just have all bills paid and charge a higher rent for those units, or they could be basically short-term leases. So there are companies, and we dealt with this on one of our properties out in Wichita. We had an Airbnb company that rented 10 of the units on a full lease, but they rent them out as short-term rentals.
Okay.
Right.
Oh, yeah. Let's see. I've dealt with that before. I've seen. Okay.
1, 2, 3, 4. So we have 10 vacancies on 48 units.
Yeah.
I always forget how to figure this one out. What's the calculation to figure out vacancy? Does anybody know?
Like percentage, figure out vacancy
Yeah.
percentage. Hmm.
Yeah.
I always
divide-
forget
just
this one.
divide the
It's 10 vacant units.
Yeah.
Divided by 48, so it's 21%.
22% vacancy.
22?
21.
22.
22, okay. So I came up, if you divide it, it came up with 20.8, so we'll call it 21.
Or 20.
So the way to figure it out is you're going to take 20 units times 766. It gives you 15,320. And then 28 units times 620 gives you 17,360. Add them together. 320 gives us 32,680. Multiply that by 12 gives us 392,160. So I would actually come over here and change this to 392,160. And put this at 21. Now here's the other issue that has risen based on vacancy. We underwrote this using long-term debt, which is a fixed rate. Does anyone know where the cutoff is on vacancy for a long-term debt?
Right?
90, so it's
vacancy?
gotta be, you gotta be occupied 90%.
Correct. So we can no longer get fixed debt on this property. We have to go with a bridge loan, which will do what?
Kill us.
Raise the interest rate.
That's right.
This will probably get jacked up to probably around 11%.
Why was it that you said that it'll go from agency to bridge?
Because it's below 90% occupied.
I missed that.
So for, let's see here, I don't want to take off anymore, is that? I'm gonna leave this at 0 until I get to an actual number. So this is what our potential actually could be. Now I want to get into normalizing our expenses. Where do you get the information to normalize your expenses? Remember, these are just assumptions for the moment.
From the broker?
You can get them from the broker. You can get them from your property management company. If you've underwritten other deals in the area, you can kind of have an understanding what's going on. Just some like average normals that I would say if you're going to have advertising, $100 per door per year. So we're going to be looking at $4,800 for just advertising. Contract services for right now, I'm going to leave it until we find out otherwise. The same with everything else that we have. We're going to be adding a management fee, 48 units. Again, you're gonna have to talk to your property management company. You're probably gonna be somewhere in the 8% range. So the lower the amount of units, the higher the percentage. The higher the units, the lower the percentage. So if you have a 200 unit property, you could probably get around a 3% management fee. Something that's only 48 units, you're probably going to be up around 8%. Payroll. Payroll's all over the place in the country. Kind of a good starting point right now, and it may even be on the low sides, about $1,200 per door. This property may not need that much just because it's a smaller property. So I would probably say talk to your property management before you even put it in. And then we are going to need to put in reserves here.
Their insurance is like less than $400 a door. Very unrealistic.
Right. Their insurance did go up to, where's insurance? Right here. I believe the broker had $40,000 in there.
Yeah, that's a little bit more realistic for sure.
So would you say 1,000?
Sorry, one thing I forgot. That's my apologies here. We have to get this we have to get this number here, this 335 down to the 193 because that's what it's actually doing. So that was my mistake.
I'm sorry, but where did you get the 392 on the gross potential rent up there?
Right here. So
Yeah.
what I did is I assumed 0 vacancy on the property based on rents. And then what I did was I took 28 units that are 1 bedrooms, multiplied that by 620. That's the current rent. It gave me $15,320. And then I took the 22 bedroom units that are getting 766. And I multiplied that, gave me 17,360 for a total of 32,680. That's what the property should be doing. That's the gross effective rent on the property, what it should be doing each month. So then I multiplied that by 12, gave me 392,160.
Okay.
Does that make sense?
Yeah.
That's what the property should be doing. It's not what it's doing, but it's what it should be doing.
That's at its maximum potential.
Correct.
There. Yes.
So we're basing our offer on what it's currently doing based on what it could be doing. We're still using the gross income is still going to be the same, but we're just putting in here what it should be doing.
Got it.
So I'm not gonna get too picky with it here. We're off like a few $100s.
Got it, got it. I see. We just had to make that that loss to lease number higher, so it calculated it right
Yes,
to get
absolutely.
us down. Yeah, yeah.
And
Okay.
then once we get into the P&L, we start playing with all of this and adjusting it.
Yeah.
So now as we're sitting at a 0.23 DSCR on our bridge loan, which this actually isn't even able to calculate. I have to move it over to the other system, but it still gives you a very good idea of where you're going to be. So although I would have kicked this deal out a long time ago, we got to this point. Is there any questions up until this point?
I'm good.
Can you remind me why you changed the operating reserves to 0?
The operating reserves to 0?
Or didn't you say you changed something? I thought
No,
you
it
said
was
this template.
deposit to replacement reserve is what.
Yeah, so this
Yeah.
template calculates in replacement reserves in the actuals. That's not an actual fee from the property. That's something the template adds in. You're going to want to put it in your offer price because the lender will want that. But for the sake of figuring out your price that you want to offer over here, you take it out.
Okay, got it. And I do see that you put it in over there on the number 4
Yeah.
column. Okay.
So what would everyone do at this point?
Throw it
Dump
out.
it.
Move on to the next
At
one.
this point, or like at the beginning,
Well,
like you said.
assume you got
I
this
know
one.
what you mean.
No, lower the price. Lower the price. Keep
I wouldn't
lowering the
wait-
price
nah.
if you want this property.
I wouldn't waste my time.
Okay.
But I would not keep wasting my time on the property.
Absolutely 100%. Hope you figure that out up to this point. But when you start doing this, get used to the underwriting process, because the more you play around with these templates, the more you start to pick up, the quicker you'll be at it, and the better you'll get at it too. So just remember, I would always try to get to this point with the deal. Now, we can't make this deal work. This deal won't work at even
No way. Tried at $1 million.
Okay. So at about maybe
500,000.
doesn't work. So
That's crazy.
Hold on.
What price are we? Oh, I lost where you're at. It did not. Seriously, 525, and we're still not even.
Oh,
yeah, maybe
Wow.
that's where we're at with this deal based on what's going on.
Yeah,
So
yeah.
Here's what I would do. I would call up the broker and I would let him know, hey, here's what I did. I put in the thing. Let him know exactly what you did. I put in all the actuals. I base this off of a T12. Now, if we base this off a T3, this deal might get a little bit better. We might be able to offer more. But I wanted to start everyone off on the basics right now. And I would let him know after I factor in what my expenses are moving forward, insurance increase, tax increase. I'm going to have a property management fee because I'm not going to be there day to day running the operations. I'm going to be at 74% on my expenses. Based on that, and also with the interest rate, because it's below 90%, I would say my offer on the property would be $525,000. Now, you're not going to submit an LOI at that. You're just going to explain to the broker what you see, give them a verbal price, because he may say, oh, no, that's way too much. That's ridiculous. Or way too little. That's ridiculous. Or he might say, well, we're kind of figured it might only sell for $1 million. So why don't you submit your offer? But one thing you don't ever want to do is get to this point and not give the broker feedback.
they like that. They love the feedback.
Absolutely. Even if your feedback is not positive for their deal. And I would always say, hey, listen, like the property, like how much value there is to add to this property, love the location, but based on the market right now with the interest rates and what's going on, this is what my lender is going to see as well.
I wonder if this is Sean Scott's property. This
Mhm.
brokerage asks for more than the other brokerages in the area do per door. like as far as whisper price goes, this one, GREA
So you're
down
gonna see
there.
that with the larger companies as well, the Cushman, the Wakefields, the Marcus, the Millichap. They're all gonna ask a premium for their listed properties.
Yeah, this particular one though tries to get more than the Marcus and Millichap, and all of them. If it's the one I think it is.
And
Kinda
that's
interesting.
okay. They'll probably find someone that will pay it. It's not gonna be you though. So always consider that when you're looking at these listed properties by bigger brokerages. Now, they're not all like that, don't get me wrong. But you have to consider, who's listing the property, who the broker is on the deal. Because like I said, when someone goes to Marcus and Millichap or Cushman and Wakefield or Bracadia, they want a premium.
I really like this template, at least so far, this tab. How do you use the 1 versus 2? I mean, obviously, number 1 is what they're asking. Number 2 is, I'm assuming, where you put in your tweaks, but what would projected be for?
So you would put in your version, which is basically how you see the property. And again, I don't use them because I just go from marketing package straight to offer, just
Right.
because I'm so used to doing it. But you would put in your version, so you can move everything that you're putting in over here, and or in projected. So it's probably not the best question for me to answer because I don't even do it.
So it's just kind of like so that you can use your train of thought to see how you've made changes until you get to where you think you want your offer.
Absolutely.
That's what I thought. Okay.
I've seen some people change the labels at the top with this, and they'll do like a worst case scenario, most likely scenario, and then like best case scenario. They'll kind of have 3 different scenarios that way, which is also kind of nice. You can like stress test one column and see how it performs.
Absolutely. You could set this up however you like to do it. This is just the way that I like to do it. For time's sake, I just put the actuals in here, and then I move over to my offer, doing my assumptions, and then I just move on. So it's just a quick way to do it, and you'll figure out which way you like doing it. Only got a couple more minutes here. I just wanted to show you the other template. This is by far my favorite one. The only reason I use the Michael Blank one is just because of the way it shows you your DSCR based on your offer price very quickly, easily. The thing I don't like about Synthesis is you have to put in your P&L all the actuals in year 1 in order to see it, which I find very complicated moving it back and forth. But this is the other one. It gives you a lot more. You could toggle back through stabilized debt and bridge debt very quickly.
Nice.
You're only filling in the dark blue boxes. You have different shares of equity depending on what kind of splits you're going to do. It gives you returns. Everything's on your dashboard, so you can see everything right here. Red warnings if it's not meeting certain marks. It's got a quick little napkin analyzer. I don't really use it, but I probably should. I just like this one better. It just has more features to it. And once you get more advanced, looking at different deals, when you have, 2 properties that you're analyzing, or maybe there's some low income housing to the property they have to incorporate. Like there's just different features for this one. But for now, the Michael Blank one is more than sufficient, especially at right now. You should not be considering bridge down any property right now. You just shouldn't, based on the market.
Do you have a blank version of the Michael Blanc that you can share? Or do we download that?
I might have it. I'll look and see if I have it.
Yeah, I mean, I could probably just send you this one if you guys want to clear it all out or something, and use it. I mean, I don't know how it works if I give this to someone. This is something I paid for originally, and
it's a paid one.
The other one. Yeah, this one's cheap. I think it's $97. It's not a lot.
Yeah, I'll look though. I think I have it.
Is that Synthesis one a paid one too?
Yeah, I think that one was $197.
Okay.
comes with training videos and everything. The basic training it comes with is more than sufficient. I would not pay the $500 for the other training videos. If you have any experience in underwriting, you'll be able to figure it out pretty quickly just from the basic ones. Any questions on all that today?
No, that was great.
Can you do it again?
Well, I plan on doing this for the next 5 sessions, so I'm going to try and find some other deals, try to get a little bit more complicated as we go, just so you guys can kind of get the nuances of everything to what to look for. And then we'll try to break it up to where we get to the point where we're typing up that email to the broker. Hey, these are my questions. Let's dive deep into every little thing, because you will have investors that will look at the financials and they'll say, hey, why in September was there a $12,000 bill for this? What was that for? And to give you a perfect example of something I caught in one of my properties, there's a property in Little Rock, Arkansas that we're putting in an offer on. And I saw a charge in there. I can't remember off the top of my head. I got to see if I can go find it. But I had a very good feeling of what it was. So I asked the broker. He didn't know what it was, but I wanted to see what he'd come back with and if he would actually tell me what it was. There was one of the units, the guy killed himself in the unit, and it was a medical cleanup, whatever they call it. Again, things you're going to want to know. That's an expense that you're not going to have. So that's an expense that you can remove off your offer price. We didn't get that far into that. The next one we'll go over and we'll say, hey, what expenses can we actually remove to actually make our offer better and bring our price up? Because that's something you want to do to be competitive.
Right.
All right. Well, I hope you guys got a lot out of that, and I will see everyone on Wednesday.
Sounds good. Thank you.
very much.
All right. Have a good one, guys.
Thanks, Brad.
Yep.
We're going.
Bye.
Bye.